Hi, my name's Frank Valentic and welcome to our Vantage Property Market Update. Well, at the start of the year, we're always asked about our predictions for the coming year. There's talk this year of it being more a buyer's market than a seller's market, which is great news for buyers. Sellers have had a great run. The market has continued to rise and had solid results since it bottomed in September 2012. So 5.5 years of a seller's market. So it is the buyers' turn to shine now, and we're looking forward to some better buying opportunities this year for our buyers advocate clients. So it should be a lot better buying than previous year, where there was a lot more competition, which will hopefully result in better purchases. There'll be less runaway results. We saw a house in Elwood sell for $245,000 over reserve before Christmas. I think there'll be less of those results as we go along through the year, and that the market will slowly steady off and provide a bit of a plateau there and some more opportunities. Well, as of the 1st of January this year, there was the introduction of the Vacancy Tax, and it'll be interesting to see how that affects the property market, because it might encourage people that have had their vacant properties to sell property or lease property and create more competition in the leasing market and also in the selling market. And that could be bad news in the oversupplied apartment sector in the inner suburbs. So it'll be interesting. A 1% vacancy tax is a fee that will be charged on the value of the property. So if it's $1 million, it'll be a fee of $10,000, which will be quite significant per annum to be charging. Well, the depreciation allowances have changed and have been legislated through Parliament. No longer will investors be able to claim renovations that other people have done. They'll be only able to claim renovations that they've done themselves. And that's a big part of our strategy, is always adding value and doing your own renovations and instantly increasing the equity. So that won't change much for our clients, but it could change for other investors. The investor market is solid. Interest rates are at record lows, and also the vacancy rate in Melbourne is at record lows. It's around 2.2%, and the balanced market is around 3%. So we saw investors drop off last year, but we've seen some great activity this year already in our office. A lot of inquiry coming through from investors, maybe part of their New Year's resolutions to add property to their portfolio. At the start of every year, I'm always asked about my hotspot tips, and this year I'm looking at areas like the regional cities, Ballarat and Geelong, which did really well last year, grew by about 8 to 9%, as well as some of the suburbs down in the Mornington Peninsula, Rosebud, Dramana, Macrae, Cable Sound, all areas there where I think there's still potential to burn, and there's a lot of increased demand there now with the improved infrastructure and transport links. So there's some of my hotspot tips. It's exciting times at the block. The Gatwick is being renovated and gutted as we speak. The contestants will start filming in February, and we're going to see a much earlier auction this year. I think it'll be around the middle of the year, and it'll be exciting to see the Gatwick transform. Great location, and I think one of the best locations the block has ever had, apart from the one in Albert Park, where I think O'Grady Street was probably the only better location than this premier spot, just down from the beach and all of Fitzroy Street's delights. And I think that will really recharge that end of Fitzroy Street, which has struggled in recent times. So it will be exciting. We look forward to being involved in our 10th series again. Please don't hesitate to get on our website, check out our information about our buyers advocate, sellers advocate, property management owners corporation services, as well as our group block purchases and our investor club as well. We'll see you next time.